Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a financial filing that's a bit like a roller coaster. It has ups, downs, and potential for a wild ride. We're looking at Adial Pharmaceuticals' latest report, and it reveals a company trying to raise money, change some deals, and keep investors happy. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Feel free to join. Scroll item 1.01. Entry tile into a material definitive agreement. Scroll case. Okay, let's get into it. Adial Pharmaceuticals had a big event in June of 2025. They did what's called an offering, basically. They sold a bunch of their stock and other investment deals called warrants to try to raise money. They sold shares of their common stock plus these pre-funded warrants, Series D warrants and Series E warrants, which are all different ways for investors to potentially buy more stock in the future. Let's talk about these warrants because they're a key part of the story. The common warrants let investors buy more shares of Adial Pharmaceuticals stock at a set price in the future. Think of it like having a coupon that lets you buy something later at a discount, hoping it will be worth more. The price to buy a share with these warrants is 0.355. However, there's a catch. These warrants can't be used until the stockholders, meaning the owners of the company, agree to it. These Series D warrants will be good for 5 years after the stockholders approve it, while the Series E warrants expire much sooner, after just 18 months. The company also includes something called pre-funded warrants with an exercise prices of just zeros can't. However, as a catch, these warrants can't be used until the stockholders, meaning the owners of the company, agree to it. These Series D warrants will be good for 5 years after the stockholders approve it, while the Series E warrants expire much sooner, after just 18 months. The company also includes something called pre-funded warrants, with an exercise prices of just 0 legal for 5 years after the stockholders approve it. While how much money did they actually get from this offering? About $3 in $6 million before paying fees to the people who helped sell these investments and other expenses. Adial says it plans to use this money mostly for working capital and other general corporate purposes. This is often a sign that the company needs cash to keep operations running, fund research, or pay off debts. There was a deal made with the investors. In that deal, Adial agreed they won't issue any new stock or similar investments for 30 days. They also can't do what's called an at-the-market offering, which is selling shares little by little over time for 60 days. There is an exception after 31st day of the deal, get then also sell shares in an at-the-market facility or another purchase agreement. Also, Adial has to hold a shareholder meeting within 120 days to get approval for those warrants we talked about earlier, and keep trying every 90 days after that if they don't get the approval the first time or until the warrants expire. To get this offering done, Adial hired AGP Chalance Global Partners as their placement agent. This means AGP helped them find investors to buy the stock and warrants. Adial paid AGP a fee of 7.0% of the money raised. They also paid them a management fee of 1.0% of the money raised. Plus, Adial has to cover up to $75,000 of legal and other expenses for AGP. That's quite a bit of money, which means the full proceedings for the company will be a bit lower than $3 for AGP. That's quite a bit of money, which means the full proceedings for the company will be a bit lower than $3 for AGP. That's quite a bit of money, which means the full proceedings for the company will be a bit lower than $3 for AGP. That's quite a bit of money, which means the full proceedings for the company will be a bit lower than 3.6 millions. Scroll amendments to CAR Series B1 warrants and Series C1 warrant scroll. Adial also made some changes to older deals with warrant holders. They adjusted the price of some older warrants, Series B1 and C1 to 0.35 per share, matching the price of the new warrants. They also changed the expiration dates, pushing them further into the future. This can make the warrants more attractive to the holders since they have more time for the stock price to potentially go up. So what does all this mean? Well, Adial Pharmaceuticals needed money, and they got it by selling stock and warrants. They had to make some promises to investors, like not issue more stock right away, and they had to pay fees to the placement agent. They also adjusted some older deals to keep those warrant holders happy. Now let's step back and look at the bigger picture. Adial is a company in the risky field of pharmaceuticals needing cash. This offering gives them some breathing room, but also adds potential future stock dilution if those warrants get exercised. The fact that they had to pay a decent amount to a placement agent also points out to the difficulty of gathering funds. Overall, there is a long way to go for Adial and a lot of potential risks. Alright, that's our breakdown of Adial's latest filing. What's your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.